We're about to do the next main stage session, which is the Investing in Frontier Technologies session. This was one of the most popular sessions at our last Transform Base because, of course, that's what a lot of us are here to think about. But just ahead of that, just to say what to anticipate next after this, is the last move to the last breakout. Weren't those breakouts amazing? Thank you all so much for contributing to them. It was just terrific to have them. We didn't know how that would work in this setting, but it was very enriching, and I loved that. So thank you all for your contributions. I think the biggest challenge is herding people between the two, but this is probably the best way to do it. The next sessions are pioneering digital assets in a frontier technology-powered world. How are frontier technologies helping shape the future of healthcare? We touched on that in the skills one as well. And a presentation beyond the code, ensuring AI reliability and transparency. So that's immediately following this before the lunch break. Now, without further ado, could I please invite Satish Melwani to come to the stage and his team. Satish Melwani, please join us on stage, and his team.
So, morning, everybody, or should I say almost afternoon. So, obviously, today we have a real experience panel, all right? I suggest let's start with a quick intro first. If you could just say a few words, a little bit about your background so people understand, where you're coming from.
Me first?
Please, Jez.
Hey, I'm Jez. I was a serial entrepreneur, started off in computer games, which I did for 20-something years, then did some microprocessor technology, then did online gaming, as in poker and casino. I switched into angel investing about 20-something years ago, and now I'm in crypto and blockchain.
Hi. I'm Aryan Alikani, one of the co-founders at Edenbase, and also an entrepreneur. I built a number of retail and consumer-oriented businesses and became an angel investor after I exited those businesses, and now run the fund at Edenbase.
Hi, everyone. My name is Charles. I'm the founding partner of Ace Venture. We are a fund that invests mainly into early stages, late seed and Series A rounds, where we lead and co-lead. Our latest fund focuses on investing in frontier tech, and with a particular focus on Europe and companies that have a strong link with Switzerland, where I'm coming from.
Hi, I'm Marcus. I head up UK primary markets and AIM, which is our growth market at the London Stock Exchange. Been at the stock exchange slightly accidentally for the last 30 years. I've got a regional team that spend their time talking to private companies about their future funding and to our existing listed companies.
So the exciting thing is today we have guys who are angel investors, should I say pre-Series A guys, Series A guys, and the guy who takes you public, all right? So that's the exciting part about the panel. So Jez, I just wanted to start with you, and when I heard a little bit about your background, obviously there's something that you didn't really add, which is not only are you an angel investor, but you're actually a startup guy, and you've actually done 2 IPOs, all right? So that just to give you a little bit more context for the people in the room. What I wanted to start with is, I know you're an early investor in DeepMind, or you were an early investor in DeepMind. And I'm just trying to understand, as an angel investor, when you invested, why did you invest? Because DeepMind, obviously, we started, I think, in 2010, if I'm right, 2009, 2010, around that period. So why did you invest as an angel investor into DeepMind?
I think the reason I invested in DeepMind was the same reason I invest in most of my angel investments, I have to know the people. I have to believe in the idea, the concept. I have to understand at least some of the tech. In DeepMind's case, I knew Demis very well. We were both from the computer games industry. I knew he was like one of the smartest guys on the planet. I had already backed his previous venture, which failed, and he'd already had an earlier venture than that failed. So DeepMind was his third startup, but I believed in him and his vision. It was very compelling, and it happened very quickly. He eventually got to the right technology, and he was backed by very good investors, and it all happened very quickly.
Excellent. And today, when you're looking at as an angel, when you're looking at investing, what is the area that you're focusing on right now?
Well, I call it tech, but you call it frontier technologies, or someone does. The technology world has a lot of innovation, and if you can pick the right technologies that are ready to be mature enough to come to the markets or be released, then I think those are the most promising things. I don't invest in anything that has, we discussed this earlier, but in things that have a very long time horizon, because although it may not look it, I'm getting on, and I don't want to wait 10 or 20 years to be able to exit. I want to be able to exit sooner than that and enjoy the benefits. So I wish I was investing in quantum or fusion or something like that, but I haven't found anything that is just around the corner that I'd like to invest in. Crypto is different, though, because crypto does happen much faster.
Okay, and when you say it's faster, in what way is it faster? How?
To me, crypto, because of the ability to invest in a utility token, a token that actually has functionality within the product or technology, there is liquidity immediately. So when you invest in crypto-related startups, you find out very quickly if they're going to succeed or not. You find out if their idea is good and if their execution is good. They usually fail within a year if they're going to fail. But the good thing is that you can exit whenever you want. You can exit even when they're failing. You don't have to wait for a liquidity event like a listing or a trade sale. You can, if the token is liquid, you can exit whenever you want. So as an investor, it's perfect. You can back the things you think are going to be winners, and if they turn out to not be, you get out.
Interesting. So I'm sure there are some people who have different investing styles. Maybe Charles, later you can give a few thoughts on what you think about, the way you invest compared to the way that Jez is investing today.
Well, I think Jez has a point regarding the duration. What we've seen is early stage. There's probably a lie in the industry that a 10-year fund is enough when you invest in seed or even early Series A's, because the winners, which you should hold on to as long as possible, tend to take that long of a time to mature, so sometimes even in excess of 10 years. That's probably where Marcus can help, and with more companies looking at Europe and the stock market is a bit less crowded, where they can emerge more visibly to create exits and valuable exits, because that has been, I think, the biggest hindrance to the flywheel effect that we're all looking for in this industry, where we need to have exits and we need to be able to recycle proceeds in order to continue nurture the cycle. Because right now it feels that although there's been a lot of innovation, a lot of new companies being created, and even early stage rounds, but if you don't have that relay capital all the way to the IPO or the exit market, then you have a problem, all the way to the LPs in our funds who are conscious that it might be the best vintage now, that the valuation have come down and that the competition is a bit less fierce when it comes to funding, But since they probably overinvested in the exuberant years, they're all lacking the available liquidity to continue invest in the vintages. No, I do share the point around crypto, but also put some hopes in what maybe Marcus has to say around where the hopes for exits.
Yeah. So, Marcus, we'll come to you at the end because you're the exit guy, right? So, Arian, just so I can, obviously you and me have known each other for 20 years, good long-time friends. And what I'd like to understand is, why did you decide to co-found Edenbase? Just tell us a little bit about the story.
Yeah, sure. Well, I've always been an entrepreneur, always will be. Always been excited by big opportunities. And in my early 20s, I went to Russia, which was one of the sort of untapped large markets. And I started a number of businesses there. One of them was the largest optical retail chain in Russia that I sold to a Dutch public company, then exited and moved back to London, which had always been home growing up. And I got into early stage investing, like many of us probably in the room do. And I sort of realized when I was in Russia and building my own business, what I lacked as an entrepreneur was community around, mentors, etc., people. And so it was very hard, as well as being in a different country and different language. And when I met Daniel and Eric, and I saw what they were building with Edenbase, Daniel really opened my eyes to the sort of power of these new technologies that were hitting us all at the same time. And as an angel investor, I saw that many startups are going to be disrupted very soon because they're not seeing around the corner. They're not preparing themselves, or they might just be going down the sort of blockchain rabbit hole without looking at what's happening in AI and some of the other technologies. And so I met Daniel while he was writing the book, and just got very inspired by him. You've all seen him speak. He's a very inspirational guy. And I met Eric and was just really understood the sort of power of ecosystems, and communities, and was so impressed by what he'd built with TechNation and Level 39 later on. So when I was invited to join them as the third co-founder and, have the opportunity to move from being an angel investor where it's very hard to, see a lot of deal flow, you don't have a team that can analyze opportunities properly, sort of joining a platform like Edenbase made so much sense to be able to take what I was doing to the next level and doing it at scale.
So how does Edenbase identify opportunities, and how do you differentiate yourself?
So Edenbase, as you said, we're a sort of seed or late seed investor. So we look at companies that already have a team, have raised some money, have a product, and have a customer. They don't have to have a lot of revenue, but we like to see that what they're building, today is relevant, and we see that they can be successful doing what they are, that they're an innovative business. But then we look to see, is there an industry that could really benefit from the application of AI or other frontier, emerging technology. And we then work very closely with those founders. We try to be very selective. We don't want to kind of use the spray and pray model, which is what many funds at our stage do. We look to invest in fewer companies but get very actively involved. And so it's really important for us that the founders move in to our hub for 6 to 12 months. Obviously, they're all running businesses. We don't expect them to be there all the time, but at least to spend a meaningful amount of time with us so that we can really roll our sleeves up and help them, whether it's a technological support that they need or industry support, introductions to corporates and whatever, to really help them take their product to market and scale quickly.
Super. So, Charles, Series A, what are you guys looking for?
Well, the common thread is that it's always about the team and the people. I think that continues to be true. You still want to invest in that exceptional talent that will be able to navigate through any market conditions, because it's a long road, as we said. But we want to see evidences of strong unit economics, and obviously we look for large market opportunities, but sometimes the very founders we back are creating those markets as well. So I'm not too fixated on that. Again, it's more the talent of the team, how well they understand what they're building. And then this idea about ecosystem and community, I think, is also quite strong, even at Series A, whereby you want to see talent that can attract other talent, and one thing we're trying to bring to the market is our experience as investors, but also my partner is a seasoned operator. I think that's something we're discussing in the breakout earlier that might be lacking in Europe versus the US, whereby you do have that deep operating experience at the investors and funds level. And so that's how we're trying to differentiate. And then we are very, very selective. Obviously, we screen through a lot of opportunities, and as you know, not every business is a fit for venture capital investment, because the cost of capital is actually quite high. And so we need to find those exceptional ventures that will create exceptional returns. And that's why investing into promising technologies that can disrupt large markets is still the name of the game for us. So for us, it ranges from obviously deep tech, climate tech, which AI, and also a bit of fintech. I think these are broad sectors, but this is where also some of the largest problems are still to be solved. So that's how we go about it.
So I know you've invested in, what I understand, 100 investments.
Yes. Over the last 15 years, yes.
Over the last 15 years. Can you tell us about a case of a, what we call frontier tech kind of company that you invested in?
Well, it's, there's been some very exciting ones, and not necessarily the most successful ones. I mean, the most successful are always quite rewarding, but I think in the journey, partnering with the entrepreneurs that have built, for example, micro geosatellites companies that come and challenge the value proposition of the incumbents and manage to foray into that. I think that's been quite exciting. And when after 5 years of backing them, you see the first satellite being launched to space, it is actually a somewhat emotional moment. But here in the UK, for example, we backed a company called Entocycle, which turns food waste into insect protein, which then gets reintroduced into the livestock industry. They also been working at it for 7 years, and I was one of the very first check, but they now have really found a path to scale, and so we're very excited to see that. And so the satellites company I mentioned, that was in the US, but this one is in the UK, and so I think, again, it's the resilience of exceptional founders that will create those more exciting companies.
Excellent. Marcus, so today, why should a company list on AIM?
So companies list on either AIM or the main market for a variety of reasons. Sometimes it's for an exit, sometimes it's for further capital. Quite often, what we hear back from companies is that by being public, actually their profile and their credibility improves to the point that actually they can secure contracts that they couldn't secure as private businesses. But I think we've sort of touched upon some of this already on the panel. The importance of having a joined up sort of funding and actually liquidity continuum is really important because, right the way from the early stages, if angels, friends and family, VC know that there are a range of exit options, then they're a lot more likely to make that first initial investment. And I think the other thing is that, for a lot of companies, actually structuring themselves and putting the processes in place that would make them a good IPO candidate often also makes them better candidates for other funding options as well, whether that's VC or an ultimate sort of trade sale. A lot of those disciplines are just good sort of business disciplines.
So today, we hear all these companies in the UK, when they want to list, a lot of them are looking at listing in the US versus the UK. So maybe you can just tell us a little bit about this and what do you feel about that and whether the UK has actually been able to bring in other companies from other countries as well.
So there's been a lot more narrative and press commentary than the actual data and the reality deserves. So just to give you some context, over the last decade, there have only been 21 UK companies that have listed on New York Stock Exchange or NASDAQ. Strip out the absolute tiddlers and the SPACs and all of that nonsense, but proper companies, 21. Of those 21, 3, including ARM, are above their IPO price. 8 have delisted, and the average performance of the rest of those companies is minus 80% compared to their IPO price. So the narrative that just by listing in the US, your valuation and your liquidity will improve, it's just nonsense. The data does not show that. Because, look, the US is a very deep capital market. There is no doubting that. But it is essentially a domestic market. Not just UK, but international companies tend not to fare as well as their US counterparts because essentially US investors want to back domestic companies. And this came up in the previous breakout session where they can go and kick the tires, they can go and see the management. So, first of all, there just aren't as many companies doing it as the press would like us to believe. Of the first 4 IPOs onto AIM this year, 3 of them have been US companies. The first 2 are now double the valuation they were at the point of IPO. And the reason that those companies have come to AIM is because they regularly tell us that the small cap community, not just access to investors, but that whole ecosystem of advisors, analysts, market makers, at the small and mid cap end is actually better developed in the UK than it is the US. So there are a lot of myths here, and it's really important to start to unpack some of those.
So as far as AIM is concerned, what type of companies are listing? Is there a lot of tech companies listing?
Yeah, so look, one of AIM's real strengths over the last 30 years has been that it does have a broad church of companies. So we've got 750 companies across all of the major sectors. We've seen a good growth in tech, in AI, in healthcare, in sort of renewables, but also in sort of the extractive industries, particularly those where commodities are going into battery technology and renewables. So it is a broad spread. Ultimately, what investors want is a good growth story. And the themes behind investors investing in AIM are the same as the themes that we've talked about. Ultimately, the investors want to build a relationship with a management team, and they want to invest in great companies with great management teams. And it is still about that sort of personal connection.
Excellent. So let's go back quickly to where is innovation coming from? Where are you guys today finding deals? When you look at, the ecosystem in the UK or in Europe, where are you finding deals and where is actually innovation coming from? Open to anybody.
When I made my angel investments, as I mentioned, they're people that I knew, but I got to know them by going to lots of conferences and meeting lots of companies at an early stage and being introduced by friends to friends that they knew that had an interesting idea. So I didn't invest in any companies as an angel that I didn't already know the founder at the point that I invested, as in know quite well.
Okay, so who you know. And
Well,
it's your
now
base of your ecosystem of
Yeah.
what you've created.
So now I've spent the last 11 years getting into the crypto and blockchain world. So I go to all of those conferences and I know all of those people. And several of the crypto startups of the last 10 years I seed invested in. Some have exited, some not yet. But now I haven't been going to the same tech conferences that I used to go to 20 years ago. I mean, I used to go to every TED conference. I went to like 15 of them or something. And you met lots of very interesting companies there. Haven't been doing that lately because now I'm in crypto.
Okay. Anybody to add to that?
Yeah, I think, sorry. For us also, it's, as Jez said, conferences like this and conferences that we attend regularly, but also it's about, the individual networks that the founders have, very different. All three, Daniel, myself, and Eric, have very different networks. And we get a lot of inbound from people. And we get a lot, actually, from our LPs. We've got Ilka and Isan in the room here today who've been amazing. They've got an incredible, flow of deals that they share with us. And some of the other LPs as well also share deals with us. So it's a bit, comes from many different places.
Well, we also, I agree, we're also using networks, but beyond networks, we also built some internal tools to scrap through sectors, and so it is tracking, what's happening on LinkedIn, for example, when people update their statuses, or what's coming out of some universities that we work with, and then I have to say that oftentimes the best founders, they are choosing their investors. So it's not so much, so then we have to chase them and actually make a case as to why our capital and our support would be better than someone else. Because of what I was saying earlier, that funnel where you really want to focus on the best of the best, you end up sometimes chasing the same teams as other funds are doing. So there's also a bit of a collaboration and competition between funds, but we do work with also earlier stage funds, and they see us as a potential good relay investor and so on. So it's being that valuable node in a wider network that works for us.
Excellent.
So very, very similar theme. So I've got a regional team. And all the guys in the team are very happy to have conversations actually with companies from a relatively early stage. Sometimes we'll meet a company 6 months prior to an IPO. I can think of plenty of cases actually where I've been having conversations for a decade and seen them kind of grow and develop. And actually one of the things that we take out of those conversations is how do we support them not just as a public company post-IPO, but how do we develop our offering so that we can support companies from a much longer stage. And one of the things that you may have read about in the press actually is something called Pisces that the Treasury and the government are developing with the FCA, and we spent a lot of time feeding in, which, to the point about liquidity that we sort of talked about earlier, it will be a whole new regulatory structure and a platform that will allow companies to stay private but to have periodic access to liquidity, because we recognise that quite often companies that we've been talking to for quite a long time that had the goal of going for an IPO come under pressure from their early stage investors for an exit, and they get sold too early. So Pisces will hopefully provide a solution to those early stage investors and founders and employees that have got share options, that they won't have to go through the whole restructuring and the cost of an IPO, but they will have access to periodic liquidity. So I think from a UK perspective, that is a massive innovation, because whilst there are sort of partial platforms globally that do this, the difference with these Pisces venues will be the company will be at the centre, so they'll be able to set the disclosure, the pricing terms, the frequency of trading, rather than investors just bilaterally doing secondaries that can have quite a big impact on the valuation of the company. So, yeah, actually there's quite a lot of innovation taking place in the UK.
Excellent. So, guys, the boss has told me to cut it, all right? So we're going to have to end on that note. I hope you guys learned a little bit about investing, all right? And you took home some ideas. Ecosystem, build your ecosystem. I think that's one of the key things. And obviously, if you want to do an exit, AIM is there. All right? Thank you very much.
Thank you.